joining, everybody. Attendees here on the Zoom webinar, thanks for hanging in there. Sorry for the delay. My name is Jeff Green from Green Team Realty, and I'm happy to be joined by an excellent panel of people that we're going to hear from in a little bit. But let's jump right into our presentation for this first housing market update of 2021. What a year 2020 was. I don't think anybody can deny that statement, no matter what walk of life you come from, what industry you work in, so on and so forth. It was a crazy year. Hopefully 2021 isn't so crazy. I think we can all agree on that. So where were we and where are we? Here's 4 key slides that can kind of show you, this is kind of a look at where things were historically and where we are. So the 6 years leading up to the housing crash, annual home price appreciation, look at this, 8.6%, 8.5, 12.5, 11.4. And then the last 6 years leading up to where we are now. So why is that a good thing? Well, it's a good thing because it shows that it's not, even though the housing market is as hot as it's been the last couple of years, with really reaching the crescendo last year with the pandemic and everything, it still wasn't quite as much of a price run-up as what it was right before the financial crisis. Taking a look at this next slide over here, months of inventory of homes for sale. Look at this. Back in 2006, which was really the peak of the last housing boom, the inventory was quite high compared to what it is now, right? So there was just a tremendous amount of inventory, which just regular supply and demand led to, the financial crisis that we were in. Whereas right now the inventory just keeps to, shrinking as opposed to what it was doing back in that crisis back then. Total home equity cashed out. This is also a good sign. Look at this. Back through 2007, there was $824 billion cashed out, and leading up to 2020, only $250 billion. So that's a good thing, right? Less debt on the balance sheet for everybody. And then, Americans, all of homes in America have at least 60% equity. That's a big deal. That means that a lot of balance sheets around the country are in good shape. So let's keep moving. We've seen this slide before. If you have been, attending the housing market update, we show this every so often that, just because we're in a recession doesn't necessarily mean that home price needs to come down. And that has been true historically. And now it's true. It happened. We had a recession. We're arguably still in a recession, and price appreciated in the housing sector. So now, out of the last 6 recessions, 4 out of the 6, price has increased during the last 6 recessions. So the growth of home equity has definitely been a story last year. You can see kind of what these numbers are. This is the most striking one. There's on average $194,000 of equity on average of all mortgaged homes in the United States. And I thought that this was a good quote. I think that this is very relevant. Home equity provides an important buffer to protect families if they experience financial difficulties, and is one reason for the generational low in foreclosure rates, right? There's a lot of things that go into that, but of course, when people have skin in the game or they have equity, they're going to fight to keep that house. So that's why I think you see what Frank is saying here, generational low foreclosure rates. That's a good thing. When you take a look at, the potential, this is basically a projection of household wealth over the next 5 years. And this is, just showing people what could become over the next 5 or 6 years here. So what else is ahead in 2021? Well, we're going to talk about work from home and how it's kind of what David is saying here. It's rewritten the playbook for many home buying and rental decisions. So it's definitely a factor. And Redfin ran a survey recently and found that 34% of home buyers have already moved to a different city, and another 33% would consider moving if given the opportunity to permanently work remotely. In other words, they're staying put because they figure they're going to be back into the office at some point. So they haven't moved yet, but they would move if they had the opportunity. So, from all sources, NARs, and all the way through MBA, everybody thinks that prices in 2021 are going up. CoreLogic, this is the most interesting of which, if you've been attending the housing market updates, we talked about this the last time. Why was CoreLogic so low? They were below a percentage point all year in 2020, and their projection now has come out at 4.1%. So they've even come around, and they're a very reliable source of data in the housing industry. So from all angles, it seems as if home values are going to continue to rise. So let's talk about the broader economy. Here's some unemployment projections. You can see this yellow line represents our current situation, right? It came all the way down to 14.5%, meaning it rose as high as 14.5% unemployment rate. And basically we're now at about 6.5%. And this is our projection here for the Fed. And this is the blue line is a projection for the Wall Street Journal. This red line is a look at how long it actually took for the Great Recession for the unemployment rate to basically come back to the pre-recession levels. So in this case, it was 9 years that it took. In their, Wall Street Journal's projecting 5, the Fed is projecting 3. Here's another way of looking at it here: unemployment projections as a rate, right? So in 2021, they're projecting this rate, 22 and 23. All good rates, by the way. Historically, those are not bad unemployment rates. Okay. Here's one other thing to consider. We mentioned this a month or two ago in the housing market update, that renters are in trouble. There could be potentially a lot of evictions on the horizon as states allow landlords to evict once again. But this was an interesting thought, I thought, by this person here. Renters are disproportionately hurt by the crisis. So does that mean that our next generation of home buyers are in trouble? Does that mean that, 4 or 5, 6 years from now, we're going to see, a downtick in people who have the ability to secure a loan financing for their home? So that's something to keep an eye on, and we will do that over the course of months. And then, no clear sign of pickups and foreclosures. You take a look at, 58% of mortgage payments that mortgagees, or mortgagors, I should say, that went into a forbearance program during this pandemic period. 58% of them are resuming or going to resume their mortgage payments and stay in their home for at least 1 year. So that's good news. Basically, only 18% of the people who entered into that forbearance program should receive a list pendants of a foreclosure notice within a year. So those are pretty strong numbers. So even the people, what this is essentially saying is that even the people who expressed that they needed some help and went for it, the large majority of them are going to get out of it and continue staying in their home and exiting without any sort of workout package from the bank. It seems that mortgage rates, how much lower can they go? We're going to check in with Ken Aulicino from Family First Funding in a little bit. But this, I thought, was a good, astute comment, was that Treasury rates have really been moving up since the election, but mortgage rates have kept going down, which is really an inverse relationship. Normally, they move up together or move down together. So Michael here is saying that we're going to start to see them move in concert with one another, as opposed to the opposite direction. And then let's take a look at our housing stats in the US here. You can see, I like to give these line charts here, just because it's easy to see trends, and you can see what a wild year 2020 was. Look at this decrease. And these are on a national level here. But then, of course, the major increase came once we kind of figured out that we were able to operate again and people started moving out of the cities. It just kind of went like wildfire. But, you see that the variance here almost equates to the variance here. So net, wasn't a massive increase in terms of the number of homes sold. But when you take a look at home price, you can see it really took off. So nationally, there was a major increase in price, as you can see there. But here's really the story: is supply of inventory. Just the months of inventory has continued to get more and more pressure. Just harder and harder to find homes. And you can see that the months of inventory continues to decline. I mean, it's almost down to 2 months of inventory. It's almost an unheard of rate. More locally, Orange County, you're seeing the same kind of chart, right? There was a big drop off earlier in the year with a huge pickup towards the end of the year, making up for the difference. It's very similar, right? You saw that national chart. I mean, it almost looks the same, right? Prices took off. Same thing down in Sussex County. Things are going well down there, and the price. I mean, what a massive increase in price there in Sussex County. Okay, so some housekeeping. The next housing market update is going to be Tuesday, February 16th, and that is going to be at noon. I put that in red for myself because this one was supposed to be at noon. I'm the one that messed that up. I apologize. But we are going to roll with noon going forward for 2021, and thanks to our sponsor, New Op. Okay, let's go out to our panel and hear from them. Keren, I'm going to start with you. You can unmute your mic. Do you think that this work from home situation is going to stick?
I do think it's going to stick. Not only that, we do have a lot of buyers right now that are looking for second homes in case we are remote with office capabilities for both parents. So lately I've been selling a lot more homes with not only the amount of bedrooms that are needed, but an additional bonus rooms for offices. So I would say my prediction at this point is that it will stick and people are preparing to do just that.
Yeah, I think we have a unique perspective being so dialed into the New York metro area and the housing market and everything that's happening in New York City. We're going to talk with Jen DiCostanzo on that in a minute. But I mean, what I say by that is we're seeing a mass exodus from New York. I don't think like any other city around the country in particular, right? I think it's somewhat unique. And so we're dealing with the people on a one-by-one basis that are actually coming out of the city. So when you're selling these homes, you just said that you're selling more homes where people need the office space, they want the office space. Are these people thinking that they're just never going back to their office in the city?
So I think it's somewhere in between. I can tell you that most of my buyers that are coming from the city, because we know the going rate is 300 people a day leaving the city, they're keeping their place in the city, but they're moving here as a second home with the capability to work remotely. So if they're paying whatever amount for rent back there, they're looking here in the houses to see that if they need to be here, they have the capability to work remotely, not in a one-bedroom apartment with 2 kids in the city.
Yeah, so they're still keeping a foot in the city, knowing that they're likely going to have to work from their office again at some point, and they don't want to lose where they're at right now. Yeah.
Right, and they're definitely calculating their driving distance from where they buy back to where they work at.
Yeah, it'll be interesting to see. I mean, the longer this thing goes, the more rooted people get in the communities. The kids are going to start to go to school up here. They start to love it. Now all of a sudden, the breadwinner, whether that be the wife or the husband or, whoever the breadwinner is in the family, they might have to commute. It's not an easy commute from up here,
But
so
they're willing to do it.
Yeah. So Jen, how concerned should we be about New York? In my opinion, New York feeds us for sure up here in the Hudson Valley. I think it feeds Philly. I think it feeds Boston. Without New York, Boston and Philly don't really come together. Albany's, all of these cities surrounding us, as well as all the suburbs. So you're the wife of an NYPD employee, right?
FDNY.
Right. FDNY, sorry. So what do you think?
So definitely by radius, it's always been, the surrounding counties is always been the exit strategy for anyone in the city within 50 to 60 miles range. I have my feet on the ground on the city because I work with a lot of clients coming from the boroughs and specifically Manhattan. At one time, it used to be fun and leisure to look for secondary homes, vacation homes, weekend homes. However, the priorities have since shifted. The city itself, I'm watching very carefully with my clientele of everyone that works in the city, still has jobs in the city. I'm really focusing and watching Broadway, the entertainment industry. I think once we get a handle on the virus itself, the Broadway entertainment, which filters into it's billions of dollars basically, and that's really the anchor for the city. And that's why people are also choosing to leave the city, because to pay the prices there, and they don't have the same, reasons for staying there. So why am I staying there?
Right.
Exactly. So I would definitely have, your eyes on, the entertainment industry. Broadway is set to open up again after the 6th revision since the pandemic, which they shut everything down. It's, if all goes well, now having the vaccination with social distancing, May 30th is kind of, that mark there. But just to put things in perspective of where the city is and how it's affecting the surrounding areas, after the last recession that we had, it took 2 years after for the city real estate to hit the highest vacancy rate. With Corona, it's 6 months. It only took 6 months. So that's, it's a good time now if you want to get into the city, because you can get apartments and brick and mortar. So this on the investment side would definitely be that time to do so. But I'm not crossing off New York City that it's going to be vacant or just something that's never going to be able to recover. That I do not see that happening whatsoever.
Okay. So Kristi, I'm going to come over to you now. Inventory is a problem. We saw how low on the national chart. It was almost 2 months of inventory. That's all that there is nationwide. I mean, I don't know. I haven't been tracking that stat that long, but that's got to be one of the lowest rates ever, all time. And we're experiencing it, right? I mean, you and I talk about it all the time. It's insane. Like, there's multiple bids for every single listing that's out there. So are there any other solutions to increasing inventory other than building more homes, or just people dropping off the map and less demand happening?
Well, we definitely need more inventory. There's definitely not even 2 months on the market right now. So we really need more listings. If anybody is interested in selling, now is the time. You're going to get top dollar.
Yeah, one thing Jen had mentioned when we were in the practice mode was that she would like to see banks come along more with bridge loans, and I think that's a problem, right? I mean,
yes, that would help too.
Yeah, because
they wouldn't have to sell their property in order to buy.
Right, which is really everybody's fear, right? They all know how hot the market is, so to speak, but they don't want to end up homeless. They know that they can sell. The problem is, can I buy something?
Right.
What a difference from 5 years ago. I mean, things
I
have just
actually had four deals like that I did last year, where somebody sold and bought, and we were able to do it. You just have to act fast.
Yeah, that's the thing. Like, you can't be gun shy when it comes time to pull the trigger for a home. Okay, and then Tiffany, how are appraisals going? You're muted. While you need to unmute your mic, but we're going to check in with Tiffany about appraisals in just a second, because this is, appraisals are one way that banks keep a lid on home pricing. So Tiffany, are you seeing that appraisals are actually happening? They're coming through at the agreed upon prices? Or
I haven't had any transaction all year be a problem with an appraisal. My approach to have the smoothest transaction, whether it's the listing side, is always to keep it real. If you're priced to sell, you're going to have multiple offers. You don't need to price so high that the appraisal becomes an issue. Price it to sell and take the best offer that you're presented with, rather than shooting so high that now it's not a smooth transaction. And on the buying side, there may be multiple offers that you're bringing to the table. I don't want any of my clients to overpay for any property. There's other ways to be the strongest offer that are taken into account with the price they're willing to pay, like timing, what kind of mortgage they have. To present the strongest offer for a buyer is not always the highest price. So I always try to keep it real so that in the back of my mind, I don't ever want that smooth transaction to be killed by an appraisal not coming in right,
Yeah.
where I think it should be.
Panelists, has anybody experienced issues with appraisals on a consistent basis? Does anybody else feel that they're becoming a problem? Jen's saying
The
no.
numbers are coming in.
They're coming in. Okay.
They're coming in at contract price, and many of the properties here on Orange County side are even appraising higher than the list price, up to 20,000 over. So I'm not seeing appraisals on a conservative pricing point on value.
It's just interesting to me with all the activity that's going on. I mean, I guess the reason why you factor in, because like we saw in some of those slides that the average price was only moving by about like 5 or 6%, as opposed to like 12 or 15% from the previous boom. But I guess at the end of the day, it's an average, right? So they're factoring in what's happening in the cities. And so those prices are coming way down, but in the suburbs, things are really blowing up, and I don't know. I'm surprised that we're not having more problems with appraisals. Banks usually will try to keep a lid on things, but so far so good. All right, Ken, let's talk mortgages rates real quick. We got about 6 minutes left here. We're going to come over to you. You can unmute your mic there. So do you agree with what that slide stated, that really mortgage rates have nowhere to go but up at this point?
From what I've been following from the industry experts, they're saying that the rates are going to go up slightly. We're not going to see the increases that we saw, or we're not going to see rates that we saw in 2007 and 8, which was like around 6%. But they are going to go up slightly, but they're still going to be very good. A lot of what they're saying right now is there's a little bit of uncertainty based on what's going to happen with the administration tomorrow. So that's going to be something that's sort of a wild card in the situation.
Right.
As far as the rates go, they're not going to go up much, if at all, very little.
Yeah, I mean, I don't see the Fed moving their rates all that much this year with everything that's going on. I mean, they're still pumping money into the economy with these.
Yeah, the Fed has said they're not going to do anything with the prime lending rate until 2022.
Right.
And as that slide pointed out, mortgage rates are based on not only mortgage bonds, but also the 10-year bond.
Right.
And that's based on consumer confidence levels more than anything.
Mm-hmm.
So, but with the influx of people that we're having from the major metropolitan areas, the difference between 2 3/4 and 3% on a standard average purchase is going to be no more than like $40 or $50 a month.
Yeah.
Not really a deal killer.
Yeah. And I mean, rates are so low. When I bought my first home, I think my mortgage rate was 6.5%. And at the time, that was really low historically. Now we're in, we have a new normal now, which is like kind of crazy. It's outlandish, really, when you take a look at the whole history of the housing market and interest rates. But to your point, yeah, even if they were to come up a percentage point, it would still be an excellent rate, historically speaking.
I'm still doing many refinances.
Yeah.
People that I first dealt with 3 or 4 years ago.
Yeah, and it's a great thing for everybody to be able to refi. And I don't know where I read this, but despite the fact that there has been a huge increase in equity, there's not a high percentage of the refis as cash out refis. There's more straight refis than cash out refis. And I'm throwing some industry lingo around for those of you who don't know what I mean by that is, let's say I have $100,000 mortgage on my house and the value of my house is 300. Well, I may want to take 100 grand out, right, and get a mortgage for 200 rather than 100. But most people are just refinancing. They're just repositioning their debt, which is a great thing. there's really nothing wrong with that, because usually it means that people are going to stay in their homes for longer. They're kind of nesting, they're staying there. So that's a solid thing. And now, Ken, with the 3 minutes that we have left, bridge loans, Jen's idea of more bridge loans from the lenders. I would imagine that more lenders don't want to do them because they're higher risk. It's probably that simple.
Bridge loans fall outside of what's commonly called qualified mortgages.
Mhm.
Your non-QM arena is going to be the ones that are doing bridge loans. They're out there.
Mhm.
They are available, but the guidelines in order to get a bridge loan actually are not. I've actually attempted a few. They're not really fast enough to
Mm.
give the / buyer seller the money they need when they need it. I think one of the bigger advantage is to, if their idea is to actually buy another house, before they put the house on the market and they have the equity in the existing home, get a home equity line of credit
Yeah,
for $100,000, then put the house on the market.
I know. It's just most people can't think that far down the line.
Yeah.
It's hard. I mean, there's so many pieces to this thing, it gets confusing. So am I to understand that essentially the bridge loans are not loans that could be resold, so it becomes a portfolio loan for the lender? Is that what it is?
Mhm.
Okay.
Correct.
Yeah.
The banks, many of the banks have, we're still starting to see these, we're still seeing these banks coming back into their full uh, uh, on a tool chest, for lack of a better word. Many of them pulled back real hard March, April, and May, and they're
Mm.
coming back in baby steps.
Mhm.
Things that were available in February, some of them still aren't back.
Right. Right, because they're not totally confident with the overall economic picture. That's basically what it comes down to.
Mhm.
Yeah, which makes sense. I mean, if it's your money, what would you be thinking too? I mean, there's so many, yes, the housing market's booming, but the Fed is still printing money to give out to people to survive. And yeah, the unemployment rate is relatively low, but what happens if, I don't know, there's a lot of variables. I don't know if there's been more variables than there ever in the history of economics than there are right now.
I mean, we have another second and third strain of coronavirus.
Yeah, exactly.
Nobody knows what that's gonna do.
Right. And hopefully this vaccine works. I mean, it's still very much up in the air as to whether or not this is going to work long term for us. So yeah, it's going to be interesting. So all right, it's 2:30. I've got to get going. I'm sure everybody else watching and on the panel, these are all very busy people here that produce a lot of sales volume. What I want to do now is I just want to quick put up their contact information, because honestly, I don't know that you're going to find a better set of realtors than what you're seeing on this screen here. These are some of the top producing real estate agents and real estate associate brokers in Green Team Realty and also in our marketplace. So here's how you get a hold of them. Here's how you get a hold of Ken down here. So thank you everybody for attending. We'll see you next month at noon on the third Tuesday of the month. Take care.